Hello everybody, this is Steph from ACFID. Hopefully you can all hear me now. We're starting this webinar a little bit late, but we're all ready to go this end. Can I just have an indication that people can see the front slide, Innovative in International Climate Finance Approaches, and that you can hear me? Just a smiley face or a yes or good on you. Okay, thank you everybody, that's all good. If you have any technical problems throughout the webinar, please go back to the start of this chat box and you'll be able to see the tech support number for Redback webinar conferencing. So it looks like we've got everybody who's registered online, which is good. Again, apologies for starting so late, but we're good to go any minute now. So this is the session on climate finance. We've got Megan Bowman and Alice Ridge will be presenting this morning. The running order will be that Alice will report back on the Climate Finance Roundtable that was held in Canberra yesterday, and Megan will go through her presentation. We'd prefer questions at the end rather than throughout, if that's okay, everybody. So write your questions down and we'll have time to talk and answer them at the end. We will make this available to you somehow, but we'll see how we go. We'll decide how that's actually going to run. But I'm pretty sure you'll be able to access it after the event. At the end of the webinar, I'll come back on and just tell you what you'll see after that and tell you where the other ACFID webinars are that we run through ACFID here. So I'll hand over to Alice now. If you have trouble hearing, we can't do much about this end. Please adjust the settings at your end, but we will try to speak loudly and clearly so that you can all enjoy this webinar and what it has to offer you. So I'll hand over to Alice and then Alice will hand over to Megan. Thanks, everyone.
Hi, good morning, everyone. My name's Alice Ridge, and I work here at ACFID. Just wanted to give a really quick update on the roundtable that was held yesterday in Canberra, of which Dr. Megan Bowman was our special guest speaker. So we're really lucky that Dr. Bowman has been able to repeat this presentation for ACFID members who weren't at that roundtable. So just to give you a quick update on what happened yesterday. So it was the second Climate Finance Roundtable. We held another one earlier in this year. And the first roundtable was really focused on getting a common understanding of climate finance, the different types of climate finance, and the international commitment to mobilize $100 billion per year by 2020 from both public and private sources. So the roundtable yesterday was focused around Dr. Bowman's presentation on facilitative and financial instruments, and was really a great chance to get business, government, and NGOs in the room together to talk about some practical ideas for climate finance. So we had some breakout sessions around sustainable food, renewable energy, resilient infrastructure, and governance and capacity building. So there'll be more of a write-up on the outcomes of that roundtable in the member bulletin. If you're not subscribed to the ACFID member bulletin, please feel free to send an email afterwards and we can get you on that list. So I'd just like to hand over now to Dr. Megan Bowman, who is joining us from King's College London, where she's a lecturer in law. Dr. Bowman earned a PhD from the Regulatory Institutions Network at the ANU. And her qualitative research on climate finance regulation in market economies has been internationally recognized. So I'll hand over now to Dr. Megan Bowman for her presentation.
Thank you so much, Alice. Thank you, everyone, for joining. It's really a genuinely pleasure to be able to have a chat with you specifically to this group of this NGO network, to really have a chat about the notion of climate finance from an angle that helps to engage you with that issue and in this space. So I really kind of want to come at it from that particular angle. In terms of, just go to the next slide. Thank you. Perfect. So really, where I want to begin is with this project and how this discussion sort of began between myself and DFAT, and really they asked me to write an options paper to research and write up about what kind of modalities exist in the world from a case study sort of point of view to help not only mobilize but also leverage private finance for climate-related purposes, both mitigation and adaptation. And when we're talking about climate finance, that's really what we mean. We mean finance, traditionally it's been from the public sector, public funds for climate-related activities, but more and more we're getting into this notion of private climate finance, which is finance that's flowing from and through financial entities like banks and insurers and institutional investors like super funds, as well as corporations and companies like General Electric and Lend-Lease. So it's this notion of private flowing of funds in addition to public governmental money. And that's really important now, because since the Paris Agreement was decided and essentially passed in December of last year, and signatures are taking place now, ratification is taking place now. The imperative really is, there's sort of two levels of imperative. One level is that donor countries need to be contributing to a pool of money, $100 billion by 2020, for deployment in developing nations for both mitigation and adaptation projects. And also the second aspect of it is what nations need to be delivering on their own domestic soil. And we call those NDCs, or nationally determined contributions. So there's this dual level notion of responsibility and obligation happening both on domestic soil and internationally. And Australia has committed under that Paris Agreement to both of those levels. So the question is, okay, where does that money come from? And once some or all of it is in place, how do we leverage it? How do we make it go as far as we possibly can? So when I was looking, I can't really speak up much more than I am. What do you mean, like louder? I'm getting the word speak up. Is that better? Can someone send me a little message saying they can hear me now? All right, I'd love to project my voice more, Greg C, but I'm currently enjoying a Canberra cold. This is about as good as it's going to get. Good on you. All right. So what I was giving you was just simply background. Australia has made commitments under the Paris Agreement, both for greenhouse gas emissions reductions on its home soil, although the exact number is yet to be determined. But we know that the world needs to be on track for 2 degrees. And the second obligation is to contribute to financially to assisting developing nations to mitigate and adapt on their home soil. So the question is, okay, how do we grab that money? How do we find that money? How do we leverage that money and make that money go as far as it possibly can? So when I was doing this options paper, I was really looking at what was going on around the rest of the world for case studies of other countries and jurisdictions that have been engaged on these issues that are potentially more sophisticated jurisdictions in relation to climate finance. And essentially that's what I was saying at the beginning, that climate finance is this notion of finance, both from private and public sources, that can help to address climate change and to facilitate resilience or adaptation. So my investigation analysis really went across those 3 areas that you can see on the slide. The notion of de-risking and unlocking, and particularly there I was really interested in looking at public-private NGO partnerships to de-risk and unlock private finance. The second sector or use of slice of investigation analysis was this notion of an enabling environment, particularly from a regulatory or policy point of view. And then the third element was measurement and verification. And just really, I won't spend any time on measurement and verification in this particular presentation, but just to say it's in a state of flux at the moment, and it's also, and it is also incredibly important because measuring where finance is flowing from and where it's flowing to on the issue of climate change is super important. That's something that's happening at the OECD level. They're keeping tracks on that. The second element of measurement and verification is impacts and outcomes, particularly, I guess, in relation to green projects and green bonds. And then the third element of measurement and verification is really metrics at the corporate level and the national level and the international level of how to measure that we are on track for a well below 2-degree world. So those three areas all come under that third grouping of measurement and verification. Those three areas, the methodologies are not yet agreed, so they are in a state of flux, but they are essential because this goes to knowing whether we are achieving greener outcomes, number one, and number two, whether the money that we're spending is actually being well spent. So I expect that in the next 1 to 4 years, we will have a lot of activity in that third area. What I want to focus on today really is these areas of 1 and 2, and I really want to look at it particularly from the point of, well, how do NGOs get involved? Where can they best be involved? And to do that, I really want to go through some preliminary basics and just really foundation building blocks on how the private sector gets on board generally with projects. I imagine that many of you are more comfortable and more familiar with working with government, but you may have experience working with the private sector as well. We can discuss that in question time. But I think the useful thing right here is to just understand, just to get inside a little bit how the private sector works. So what really motivates the private sector is this thing called the business case. And in this area, I really wanted to understand, okay, well, what are the drivers for engagement of private finance flows, and what are the barriers to that engagement? So the driver is simply this thing that we call the business case. And the business case is really just risk-return logic. And as one banker, I've spoken to a lot of practitioners in this area, did some empirical work, particularly with banks and bankers in market economies around the world for my book, Banking on Climate Change. And as one of them so eloquently put it, when we speak about the business case, we're really talking about make money and do not lose money. So what is the business case? Well, it's not just about dollar signs. It is a combination of both hard and soft factors. So the hard factors really are quantifiable, and they will have dollar signs in front of them. And the soft factors are not so easily quantifiable. The financial value or more broader value might only be realized down the track. But often when we're talking about soft factors, particularly in this space, we're talking about reputation. And that can be social reputation, like social license. It can be corporate reputation, so reputation with very large corporate clients. It can be green reputation. It can be market reputation. It can be market share. It can be gaining and retaining the best employees. So these sorts of elements are not easily quantifiable, but they are just as important as the ones that are. And more we find that in this space, the reputational or soft factors are gaining in salience. They are gaining in importance. And that is really important to know, particularly from an NGO point of view, because that's an aspect that can be leveraged by you. So really, I think I want to emphasize how important partnerships are. So I mentioned before about private-public NGO partnerships, PPNs. That's pretty new, actually. Mostly the discourse, certainly in the literature, has been about PPs, public-private. So I love the idea that we now have an N in there. I think that's fantastic. And particularly when we're talking about work in developing nations, it's essential. So this PPN, this partnership, and the notion of policy as well, government policy, in shaping corporate perspectives or private perspectives of the business case is really, really important. I mean, you might think that the business case was just simply a market formula, simple economics. But the fact of the matter is that partnerships and policy will change and colour the perception of the private sector about what their business case is and how to evaluate it. So, so that's something I really wanted to emphasise, and I guess that's one of the things that the climate finance really brings up is this opportunity for asking, okay, well, how can what we do help to facilitate the business case for finance and investing? And I'm really sort of going to tell you that it's not necessarily a financial contribution. And in fact, I think that's one of the lovely things that I kind of found was that the work and the partnerships and the facilitation from NGOs is really, really important in this space, what I call facilitative instruments. And we'll get to that in a moment. On this particular slide, I just wanted to discuss barriers to engagement. So we know that if there's a robust business case, the private sector will get involved. We also need to know that there are certain barriers that the private sector, once they see or once they perceive, because perceived barriers are just as important as actual ones, they'll run a mile, they won't get involved. And there's really two categories of barriers, and the first is institutional, and the second is localized. So the institutional barriers really kind of go across the board. Doesn't really matter what country you're in, what jurisdiction you're in, what level you're at. These tend to keep cropping up, particularly in relation to climate change and projects and investments in space. So the first is really this notion of awareness of systemic climate risk. What does that mean? It means that you have a risk that impacts on really every sector in society. So not so long ago, really 12, 18 months ago, mainstream notions of climate change as a risk was really, well, physical risk. At best, maybe a risk to one's portfolio, maybe. But this notion that it could be a systemic risk, that it could actually impact across sectors and all levels of society is relatively new. And interestingly enough, the notion of a systemic climate risk has come from some really high-level financiers, particularly in the UK and Europe. So Mark Carney, who is the governor of the Bank of England, he's the chair of the Financial Stability Board, recently came out. It was in September just last year, publicly, at a Lloyd's Insurance dinner, and essentially said climate change poses the greatest risk for the finance sector that we have ever experienced. And many of us already knew that. But to have the head of such robust financial international organization stand up and say this publicly was an absolute game changer. So suddenly the private sector really started to take notice. And this notion that financial viability is desperately, deeply interlinked with environmental sustainability and social sustainability has started coming through more and more strongly through these sorts of organizations. That second point, information asymmetry, what that means really is just gaps in information. Gaps in information means it's really hard to put together a business case, and it means it's really hard to evaluate a business case. So the less information that is readily available, the harder it is to get finance flowing from the private sector. And that's when you get perceptions of risk, not even necessarily actual risk, but perceptions of risk getting really high, especially around projects, of course, in developing nations. Notions of adaptation, notions of capacity building, these notions are so important, but no, we don't really have a globally agreed definition of these sorts of terms yet. So So that's, these are some of the things: information gaps, definitional differences. So these can sometimes act as barriers. So adaptation, particularly, as you would know, can be difficult to attract finance. One of the reasons is the very long time frames involved in adaptation doesn't lend themselves so well to a business case. Social returns are so important, but social returns do not equal financial returns. In fact, they're a public benefit. So if you think about seawalls or trains, train lines, telecommunications, water, infrastructure, these sorts of areas have um, often have uh, social returns, but not necessarily financial ones. If you don't have a financial return, then you suddenly don't have that business case making balancing. The risk return element isn't balancing. So, know-how deficit in this particular area, particularly in relation to transactions and the costs involved with novel modalities of finance, that can be a barrier to that people and corporations, any institution really, tends to like to stick with what it knows. So, in some ways, not in all ways, but in some ways, we're introducing new concepts, new ways of valuing, um, and that can be um, a bit of a deterrence for some entities. Localized barriers, I imagine that you're quite familiar with. These really pertain to developing nations. Although Australia's got some of its own, particularly in relation to policy uncertainty. But political risk, regulatory risk, monetary or currency changes, breach of contract, those sorts of risks, sovereign risk, are particular to projects and investments in developing nations. But certainly with policy uncertainty, that's a risk as well, and we've experienced that firsthand on Australian soil. So the question really is, we've been through the driver, which is the business case. We've been through the barriers, and there's a few at both the institutional and local levels. The question is, how do we harness the business case? How do we clue into it? What entry point do we have there? While overcoming, or at least addressing, some of these barriers. And what I found when I was doing this work is really, I think initially we all went into it thinking that I would just come up with recommendations around financial instruments. And when I say financial instruments, I just mean, where can we throw more money, any money, and what kind of mechanisms through can we throw that money through. But what I found that was just important, and I think this is key for the discussion today, is that there are these things called facilitative instruments. And these are instruments that are not financial, they are more informational, and they relate to creating project pipeline and to capacity building and to networking and to partnering. And they are just as important, and they complement with the financial instruments. And that together, that's what's required in order to really mobilize and leverage private climate finance. So this notion of facilitative instruments is really something I don't know that we expected me to find, but I'm really glad that I have, because I think it's a really fecund area for NGO involvement. So what might that actually look like? Well, I've got this table here which really just kind of sets out really neatly the notion of facilitative and financial instruments and what kind of instruments you would have under each. So you can see going horizontally with facilitative instruments, central information repositories, knowledge sharing, capacity building, matchmaking and training, collaborative development of ideas, or what we call idea labs, corporate disclosure and 2-degree transition. That's really exciting. That's beginning to take off at the moment. Really, it's just started this year. it really sort of only since January, February of this year, since the signing of the Paris Agreement, since the world agreed that it would keep global warming to well below 2 degrees. And suddenly NGOs, particularly in the UK and Europe, and also the US, and institutional investors, particularly superannuation funds, or what they call over there pension funds, have really started asking themselves, well, where are we investing in terms of companies, and are those companies on track to help keep the world at well below 2 degrees through their work and their investments, and how are they going to cope in a carbon-constrained world, in a 2-degree world? So we're beginning to see movement around asking companies really to sort of account for how they're going to move forward in the future in a carbon-constrained world. And they're calling these, AGMs are calling particularly for fossil fuel companies, but I really want to stress that this goes across the board. This is not just fossil fuel companies. This is financial entities and normal companies, your everyday companies, your Woolworths and AGLs. How are they looking at transitioning? So that notion under the enabling environment is really important. And then you can see that bottom horizontal row about financial instruments. And that's blended finance, concessionality. It's probably something that you're more familiar with. Co-financing, risk mitigation tools in terms of guarantees and insurance. For every green encouraging or incentivizing policy instrument, there has to be a reduction of the brown ones. So removing fossil fuel subsidies is obviously super important. Carbon pricing, super important. Green bonds are only gaining in momentum. Tax credits are something that have been used to great success in the US, particularly post-global financial crisis and post-Hurricane Katrina to help rebuild the US. And then grants, government grants, yes, and then government grants to business for renewable energy investment and adaptation investment. Where I really want to spend time today is in the facilitative instrument, that top horizontal row, because I think that's where the most traction is for NGOs. And I guess I really just sort of want to emphasize that this is what a sort of an optimal framework is going to look like. It's going to look like a blend or an integration of these facilitative and financial instruments. And you can see really they kind of revolve around the business case. They revolve around getting project pipeline flowing. And that's, these circles around that box of business case and project pipeline, these little ovals, are predominantly facilitative, actually. Risk mitigation tools are financial, but the knowledge sharing, capacity building, central information repositories, government engagement, private sector, corporate disclosure is all facilitative. And then leading to the financial instruments, blended finance, green bonds, tax credits. We're going to have to know what the outcomes and impacts are of those mechanisms, and that's going to be through measurement and tracking, and that's going to have to feed back in. So, it's not an atomistic approach, it's not an isolationist approach, it's very much an integrated framework of facilitative and financial. So in terms of, I want to focus here now on de-risking and unlocking. I've had a chat to you about corporate disclosure, but I really just want to focus on what's happening in that box for the purposes of this webinar. So hopefully you can get the most out of it. So these central information repositories, well, that's my suggestion. I'm seeing analogies of that around the world. The Global Environment Facility, GEF, is a great example of that, and that has really been working with more than 60 countries to strengthen their climate information services with a view to building centralised information repositories of climate-related issues such as coastal hazards, diseases, value chains and weather patterns. and mostly that's been for sort of local benefit. But essentially what I'm saying is that these kind of repositories are invaluable for engaging private sector actors in climate projects in developing nations, because it goes to that remedying that institutional barrier of information. So improved information resources really that are so crucial to the business case evaluations, especially for long-term and adaptation investments. So I want to give you an example of what's happening in this area. So you've got the Global Environment Facility doing its work, but what I really want to emphasize around central information repositories is the need for on-the-ground assistance and information from local governments and NGOs with local knowledge. So this is a fantastic example of that PPN partnering that I mentioned. And there is an example of that actually happening at the moment with Zurich Insurance, and it has partnered together with the International Red Cross organization, with Wharton, which is a business school, with a UK NGO called Practical Action, and a technical institute, IIASA. And together, they are creating a flood resilience measurement framework. And it's really being lauded as highly innovative. The insurer Zurich has also kicked in $32 million as a initial investment from its end. But really, it's happening as a partnership. So that's 4 or 5 entities working together, using their different technical strengths together to help build this sort of centralized information database, particularly in this case around flood resilience in local communities. So that notion of partnering and knowledge, I think, is a real strength from within the NGO community, and it's facilitative. It's not necessarily financial. The other really interesting thing that's happening in this space are what I call matchmaking and training programs and idea labs. So some of you may have heard of the CTI PFAN, which really it's operating at the international level, but focusing on communities in developing nations, particularly in Asia and Africa. And what it does really is it matches up local projects with available capital. The capital in the private sector exists, so the money in the private sector does exist. It's a matter of getting it to flow to the right places, to the right projects, to the right communities, to the right jurisdictions. So something like the CTIP fan really focuses on getting the project proponents in their local communities together with funders and investors, usually local investors as well. And how they do that is essentially they help to educate and train the project proponents about building a robust business case and about how to make their idea or their project viable and attractive to an investor. They also train the investors so that the investors know what they're looking for in a different environment, in a context that they may not be used to working in. And essentially, the projects will be showcased to the investors, and the investors can get to know the project proponents and make a choice about where they want to invest. So as of May, so just a couple of months ago, there had been 74 projects financed at a total of about 812 million, which to us is a lot of money, but to the private sector isn't. But these projects are getting financed. They're helping to build what is required in the local communities in relation to renewable energy and resilience. And that has only really cost 5% of public money in terms of administration costs. So, and expert consultant fees. So that notion of matchmaking and training, again, a lot of NGOs are involved in this space in helping to identify the projects and helping with the training on the ground. So that matchmaking, training, partnering is really important. And idea labs in this space, so collaborative development of ideas is super important too, because what I keep on hearing, particularly from the private sector, is where is the pipeline of projects? Where are the projects for us to invest in? So we know they exist, but where are they? We can't see them. We can't find them. And if we can't, then obviously we can't invest. So this notion of project pipeline is really key. So entities have been putting their minds to, well, how do we do that? How do we start getting that flowing? And there's this fantastic organization called the Global Innovation Lab for Climate Finance, which again is a sort of multinational entity. It's financed by the UK and Germany on a really minimal budget, really just to kind of finance the main secretariat, which is the Climate Policy Institute and Bloomberg Finance, and associated costs with that. And the idea of this entity is it has very senior level participants, which is a real key, from both private sectors and governments on board. And they put a call out for ideas for innovative financial mechanisms that they can roll out in developing nations. And they are just, I mean, they literally just began, they're just up to their second call for ideas. But their first call for ideas produced 4 different financial mechanisms across renewable energy and adaptation. And those ideas are now being just now being implemented across in certain areas of South America and Africa to see how they will go. And at least 2 of those financial modalities were brought to the attention of the lab through NGOs. So I just really want to emphasize in this facilitative category the importance of partnering and the importance of knowledge, and that it's a real comparative advantage. It's a real strength that the NGOs on the ground and the NGO community generally has, that the private sector wants. And it's this notion of kind of collaboration is really key in this space. So that's really what I wanted to focus on today. I think we can open up to questions and discussion. Feel free to ask me questions or just have a discussion amongst yourself. I'm really, I really want to invite sort of networking discussion as much as questions to me, because I think there's a lot of power and knowledge to be harnessed and experience to be harnessed right here in this network between you all. So I really want to put out that invitation for that kind of connected discussion, as much as any questions you might want to direct to me. Okay.
Hi everyone, it's Steph again. Just waiting for you to type in your questions. Just type them into the little box down the bottom on the left-hand side. If we don't get any questions, we'll wind it up a little bit sooner than 12:30. I can see questions starting to come in now. And you can direct questions to Alice as well, but I think most of them will be for Megan. So yep, we've got one question in from Jeanette about green bonds, and there's a few people typing now. So it looks like we'll keep going. I'll have the headset back over.
All right, thanks for your questions. So yeah, so Idea Labs, so I'll take Greg C's question. Any Idea Labs in Australia? Not that I'm aware of. Doesn't mean that they don't exist, however. So interestingly enough, at the roundtable yesterday, there was interest, particularly from the NGO community, about either getting on board with one of these international idea labs, or creating, or at least beginning to sort of partner up for an Australian-based one. I think there's a lot of potential here. I mean, these notion of idea labs are. I mean, the idea might have been around for quite a while, but their manifestation and what they're actually producing now in the climate space is really recent. So I think there's fantastic opportunity here, both for investigation to see whether there are any beginning on Australian soil, and also for actually either getting on board or beginning to implement them. So Jeanette has asked, so can you tell us what green bonds are? So essentially, they're what we call a debt instrument. They are very popular with, or they're, no, let me use a different word, they're attractive to institutional investors and large-sized investors, because usually the contribution to a green bond is really large, in the millions. So they tend to appeal to investors that have that kind of capital, that kind of large scale capital at their fingertips. And essentially the idea of a green bond is that, like any kind of normal bond, is really the notion that money is being directed into a project, or more, we're seeing sort of portfolio projects for a particular purpose. So you will have heard of war bonds back during the time of the Second World War, and that they were really purpose-built sort of bonds or investment. And that's exactly what a green bond or a climate bond is, and the purpose really is investment into a project or a program for a particular green or climate purpose. Anyone can issue a green bond. There's just different risk weighting or ratings associated with that. So Treasury can issue a bond, and that's really the kind of the best case scenario, because they are deemed to be akin to risk-free. But other governments can issue bonds, municipal governments can issue bonds. In fact, a lot of local councils are beginning to issue green bonds in Europe and in America. The very strong sector actually in America, municipal or muni bonds. And corporations can issue bonds. They have to have a pretty good credit rating, though, for the bond to have a good credit rating. Banks are beginning to issue bonds. And so they will issue the bond. You'll have the issuer of the bond, and then you'll have entities who are the buyer of the bond. And really, they're the investors. So they invest money, and they earn their money back sort of over interest, through interest and final repayments. So it's a nice, safe instrument. There's not the kind of risk involved that is involved with equity investing, for example, or investing in companies. And they're attractive to big investors, and they can be purpose-built around mitigation, or just as importantly, more importantly, particularly when we consider social returns, adaptation. So Europe has been really quite active in the green bond area. KfW is the German development bank, which has really set aside $1 billion to help not only issue its own green bonds, but to invest or to be a buyer of green bonds issued by other governments and cities and corporations. And in fact, it did just that. There was a corporation just a couple of months ago, 10ET, who issued a corporate green bond to help connect offshore wind farms into the grid, the electricity grid in Germany. And that was a corporate green bond that was issued and the KfW, the German Development Bank, and Morova, the French Investment Institute entity, co-investors in that green bond. So Europe and the US are really quite engaged in the green bond space, and Australia is looking to become more so. I mean, we have some burgeoning expertise here now. NAB, the National Australia Bank, and Flexi Group just issued the world's first securitized and verified and accredited green bond for solar rooftop PV, and that was really deemed around the world as yeah, a global first. So we're getting burgeoning experience here now in Australia. So in terms of, from Philip, have you got a practical example or a case study of the way NGOs have gotten involved with climate finance? So I guess, yes, I do. And really that's sort of what I've been talking about is this notion of facilitative instruments. So the Zurich insurance example is, I think, just a fantastic example of partnering with technical expertise of PPNs in the climate finance space. And the CTIP fan and also the Global Innovation Lab for Ideas are really the strongest examples of how NGOs have really been involved in the climate finance space in this facilitative way. So, and in a provision of local knowledge way as well.
Right, not sure if we're going to get any more questions. Marilu, Megan can't really answer your question about the issue. It's not really a question, so can't really address that at this point. So coming up to 25 past, we might start to draw this to a close unless there's a last minute dive across the barrier to get a question in, but we can see how we go. Okay, one more question coming in if it's reasonably quick. Certainly hope that you all got a lot out of this morning and appreciate Megan taking the time to come into ACFID and giving this presentation, a very specialist area. Okay, so there's one more comment, and then I'll hand back over to Megan to summarise, and then I'll come back and wrap up.
Thank you very much, Steph. All right, so just a comment about climate insurance being difficult to sell in developing countries. I'm not quite sure what that comment pertains to. Actually, to be honest with you, guarantees and insurance related products that are provided by developed nations, so not the host countries, are actually incredibly attractive to motivating private sector engagement and investment in developing countries. And this came up a number of times yesterday during the roundtable, which was essentially this notion of the risks, the localized risks as barriers that I mentioned at the beginning of my presentation. How do you mitigate those risks? How do you share those risks? And in fact, insurance-related products and guarantees are an incredibly successful way of doing that, really effective way of enticing and incentivizing private investment into contexts where the business case in and of itself would not stack up. So you actually need those insurance-related products and guarantees to help rebalance the business case in the favour of investment. So an example of that is the US, particularly in the green bonds market, to help encourage issuance of green bonds by corporations, particularly, and cities. It gives insurance-related products or tools for a fee through USAID and through OPIC. So and that has really helped to facilitate issuance of green bonds in those areas. And Germany's had a very similar experience, and Denmark has had a very similar experience. So so actually those tools, those instruments are incredibly attractive to private sector actors in developing nations. Obviously, though, that they're a risk from the entity's point of view who is issuing them. So there's no upfront cash in a guarantee or an insurance, but it's a risk that is taken on that may have to be paid down the track. So it certainly sits on the on the debt side of the debt to asset balance sheet. So that's just something to keep in mind. But that's for the government to be concerned about. That's not for NGOs to be concerned about. So I just want to say thank you so much for listening, for cluing in. I think the work that you do is incredibly important. I think it will only gain in importance in this space. I hope that this little Climate Finance 101 tutorial has given you a good taste of what's happening in this space, just to whet your appetite to really start getting involved. There's so much more to say and so much more to do. So I wish you the very, very best, and thank you for your time. Thank you.
Thanks everyone some people have had to head off. Getting some thanks of comments in from Megan. I think that's been incredibly informative. And Alice has reminded me that don't forget there's a climate change community of practice that ACFID is involved with. And if you'd like to know more about that, please contact Alice Ridge at ACFID. I'm sure all of you have her contact details. If you don't, please let us know somehow. The exit page, which I'm about to put up, I'll go back through Megan's presentation. Is that the final slide? So this is the last slide. What I'll do now is I'll close off the webinar. Give it a few seconds to come up, and it'll be the exit page will be the ACFID Learning and Development. Give it a few seconds to come up, and it'll be the exit page will be the ACFID Learning and Development pages. So look on there for what we do in this learning and educational space, both in the past and what we'll be doing coming up into the future. And have a look on the ACFID YouTube channel. Just go into YouTube and type in ACFID, and you'll see what previous webinars are that we do. There's some DFAT presentations and code of conduct presentations as well. So look forward to seeing you again on a webinar soon. So stay on the line just for a little bit longer, and we'll see you all again soon. Thanks everyone.